What's going on, guys? So we're driving home right now from picking Amrish up from the airport.
How you doing?
He's been with me for 2.5 years now, and it's crazy. Met him, he's from the Netherlands. You guys will get to hear the whole story, but honestly blessed to have him. It's pretty exciting. We're about to show him American culture, get him into a bunch of shenanigans. So make sure you guys check the videos out with him. Make sure you guys subscribe to like the video only if you like it. So I'm going to talk about that. This is a video request we got from the live stream, and the request was how to spot bubbles. They wanted me to talk about that because if you followed any of the stuff I've done, you know, I've said this a lot, I make money off of bubbles. I've made a lot of, that's usually where I get a lot of my money, is I spot bubbles, and just I'm able to spot them early on and capitalize on them. You know, if you're able to spot a bubble, and that's one of the more riskier things I do. You know, I remember even Daquan commented this, you know, I said this even with my penny stock. He said playing bubbles can get you hurt, and that's very, very true. You know, that's probably the riskiest thing I do. However, I try to find certain factors to put the odds in my favor. However, the fact of the matter is, trying to play bubbles, trying to spot them, it's very risky. You know, it's kind of trying to catch momentum in a weird way, but more solidified off of the fact that understanding the cycles, and just it's not really short term. Bubbles are, I guess, long term momentum, but the whole idea is a bubble, it means something is inflated. The prices have bubbled beyond what they're actually worth. So really I want to talk about that and how to spot them, and to even get into it, you know, what a bubble is and how do you really spot it. It's when assets detach from their true value and get to a price that's just keep going higher and higher than what it's really worth. You know, it's like, imagine if at one, you know, people go crazy for Hershey bars all of a sudden, and they start selling for 10 bucks, 20 bucks, 50 bucks a Hershey bar. You know, a good example that you guys could probably see in real life is Yeezys. You know, those are $120 shoes. However, they're selling for 900 bucks, 1,200 bucks, $1,300. And what makes it a bubble is when you start noticing more and more people buying in at higher and higher prices. So kind of the more ridiculous it gets, you start to see more people rush in. That is one of the key signs to a bubble. And I'll talk about the stages of bubbles. Really, it goes from hope, where you're kind of like, you don't think it's gonna happen. It's hope, excitement, disbelief, and then euphoria. So it's kind of a chart you can see as it goes. You know, hope, it's kind of around a normal price range. Excitement is when it starts to rip above its highs. That's where you get your breakout points. And then disbelief is when it starts going just kind of like the SPY. As of recently, when you see the S&P 500, it just goes vertical. And even a good example, GoPro, some experience this on shorter cycles, but again, GoPro wasn't a bubble based on the company, but it was a GoPro in the sense of IPOs, and I'll talk about that. But then disbelief is when it goes even higher past these breakout points, just goes vertical. And then you have, I already said excitement, then you have euphoria, and euphoria is being high. That's where it's just like, you don't feel anything wrong, you know, nothing can faze you, you're kind of numb, and everything's kind of dreamy. You know, it's kind of the euphoria people get the first time they make money in the stock market. They think they could quit their job, and you're like, wow, like, I'm free from my job, nothing's gonna affect me, I could go buy whatever I want, yada yada. You know, I'm sick of hearing that shit, but that's the stages to it. And really, to get in the bubble, you want to start noticing more and more people buying in. But the goal here is to get in at either the hope stage, but it's hard to determine if it's a bubble at hope. But you really kind of want to get in at the excitement stage, and not try to play the breakout, just a little bit above. And then it's understanding the factors fueling it. There has to be specific factors for demand, and a lot of that is even social. So you have to see that it's making people money, and the more money it generates, that's what you got to kind of see a history of, because bubbles don't get created for no reason. People are willing to buy at higher and higher prices because they see more and more people making money. So weed penny stocks is an example of a bubble. IPOs in 2015, and that's what I'm saying, go look at any IPO, they started ripping, but I made literally almost just under $1 million on IPOs. And when you look at what happened, every single IPO, it started with like Loco. That was a good one. What other one? There's like Radius, and I'm still holding those shares, but there was like 5 or 10 IPOs, and then nobody was playing these, and eventually they were just doubling, tripling, going up 400%. And then what started happening, then the next IPOs that came out, more and more people got in. Then the next one, more and more people, and as people made money the first 5-10 times, that's what started to create the bubble, to the point where everybody started IPOing, and then all of these companies started just coming out. And eventually the bubble got stopped because that demand was so high, kind of like with what you saw with Snapchat's IPO. Demand was so high, by the time they hit secondary market, you know, the brokers on Wall Street are like, wait, why are we gonna sell it at this price or $1 above? They were pretty much selling it 50 cents above what they bought it for, and well, there were all the gains. So that's one example of bubble. You know, think about weed penny stocks. People started seeing guys on Twitter showing how much they were making on these weed penny stocks, these promoters, and as these guys started to make more and more money, people started to get into it. And then those people who got in, really the goal here is you have to be in the second wave of people. If you're in the third, you're taking the risk. Fourth, you're the one holding the bag usually. So it's spotting social factors like that, and just understanding when people get crazy. It's one, if there's good factors for demand and stuff like that, and things driving it. Like again, IPOs are just great opportunities. They were coming in cheap. Weed penny stocks, it had the legislation. Another bubble was earnings, and why earnings was so good in 2015. And I'll make another video on earnings because that was a request, because earnings aren't plays you're supposed to play every quarter. You have to be able to spot earnings bubbles and when the time is right. And here's kind of a little tip how, and it relates to the bubble, because in 2015, most companies for 3 years, from 2011 till 2015 or 2012 to 2015, they had earnings reports, but they weren't moving up. So that's why when you're betting on 5, 10, 20% moves on Amazon, Google, Netflix, all those stocks, they were really cheap options. And that's how I got in. You know, I was buying options when that play where I did $600 into 30,000 in 2 plays. I was buying a contract a year of time left for Netflix. It was 50% out the money, but I bought that with a year and a half of time, and I paid $150 for 7 contracts. That's 25 cents a pop. You know, think about how crazy that is for that much time. If you even wanted to get 50 cents above Netflix now for a year and a half of time, you're spending a couple $100. So that was the issue. And that's what happened, is now you're buying into high again. Once the bubbles, especially with the stock market, although the demand can increase over time, it's not as if it just demand evaporates, like kind of like in real estate, because it's harder to see that demand in real estate. That's why you see the bubbles and bursts and other assets. You know, even think about like Yeezys. If people stop buying them, the prices will drop, because you don't have market makers. You don't have Wall Street. What Wall Street does when they notice a bubble, guess what they do? They fund it. They facilitate it. They go start selling those same items at higher and higher prices, and then the money starts going to the brokers. I'm picking my nose right now. But so I forgot kind of where I was with that. I think I picked too hard on my nose. But it's, where were we? Bubbles, spotting them, IPOs, just kind of going over the factors. But hopefully you guys see, you know, it's a hard topic to really describe, and you know, I could go on for days with it. So I'll kind of leave it at that. And you know, one example I'll give you, I encourage you guys, go study Tulip Mania, because Tulip Mania is pretty much the first ever bubble that occurred. So and it lets you understand too, these are the factors of psychology. You got to understand how greed works. You got to understand what fuels people's greed. And when people see other people making money, they start letting go of inhibition. They stop thinking about risk. And that's what we saw with Tulip Mania. You know, Tulip Mania, essentially at one point in history, this was like during the 1800s, even earlier I think, You had people willing to spend as much for a home for a contract saying they would get a bundle of flowers for one fucking flower. And think about that. You know, that didn't have good intrinsic value. You know, a flower would die, but why were people spending so much on the flower? Because they really simply believed that they could buy that flower and sell it for more money to another fucking idiot. So you got to realize at one point you're going to run out of idiots. It's kind of like multi-level marketing. You know, if you wanted to do 13 cycles of recruiting 3 friends in multi-level marketing or something like that, it's like after 13 cycles, you've exhausted the population of the earth. And that's what happens with bubble. You got to see bubbles. You have to see, is there still a wide enough range to expand? But then also, what is the underlying asset you're dealing with? But go study Tulip Mania and see what it was and see how it affected people and what motivated people, and even in the outcomes. You'll learn a lot from that, and even learn about it a lot in trading, because once you start to understand about greed and bubbles, this is even going to make you not only, hopefully you guys don't see this as, oh, because then again, if you're only looking, how do I spot bubbles to make money, at the end of the day, you're still the sucker. You should be saying, how do I spot bubbles to protect myself? The main goal here is to protect yourself when it comes to money and trading and all that. Money, you don't make money, you earn money. How you earn money is by protecting it, you attract it. Too many people are focused on making money. So that's what I'm saying. If you're too focused on trying to make money, you're gonna lose it. You chase the things, it runs. You're focused on protecting and earning it, well, that's a different story. So that's why you learn about these bubbles, to learn how to protect yourself and understand, hey, maybe I'm in a bubble, maybe, you know, look at how my emotions are making me act, maybe this isn't a good idea. And guess what? When you start to protect, it will lead to opportunities to make money. So I'll leave you guys at that. Let me know if you have more questions. We'll make videos. Tune into our live streams. We don't have a set schedule yet. We're going to try to do them every Tuesday and Thursday, and then sometimes on the weekends. But yeah, so give me some video comments below, video requests in the comments below, and I would love to make them for you guys. Stay in school.